We're so freaking early. We are so early. It's like everybody on the screen has spent 10,000 hours plus in Bitcoin, yet some people literally just see Bitcoin, see the number go up, and they haven't even dipped their toe in the water figuring out what it is. But this excitement, this continuous all-time high excitement will continue to bring more eyeballs in here. Like, what's going on? What's happening in this space? What is digital credit? And that just takes so much time. And people are so impatient right now too, which is they're really quick to say these Bitcoin treasury companies are dead. They're failing. That's like saying that the second insurance company or the third or fourth insurance company in 1696, when they're insuring boats going across the Atlantic, oh, is it like there's only going to be three of these things ever. It's like, what are you talking about? Like this land, the landscape is so huge. It is so vast. There's so much opportunity that we just don't, a lot of it's inconceivable right now. Like we don't even know what it looks like, but it will make itself known in the next 5 to 7, 10, 15 years. But that process will be hyper accelerated, right? Thinking about things that are insured today, they were completely inconceivable in the 1600s. And that's the evolution of this marketplace. It's very, very similar. There will be different products that we don't know exist today, but they will exist in the future. And that's reshaping this entire financial world. So yeah, I think we're incredibly early. It's just so fun to be working in a space. And I think that there's a lot of antagonism from like these Bitcoin OGs when there could be excitement and support because this is ultimately good for the entire Bitcoin ecosystem. You've got this shift from these like crypto bros into institutions that are holding this capital and supporting the network permanently for the future. So yeah, it's an exciting place to be, and I think there's tons of room and opportunity out here for many companies to even just store your value. Like if you're concerned about just storing your value, like the money that you make and you want to store it appropriately, Bitcoin is a great option if you're thinking for the long term.
Yeah, I think tribalism is always going to be out there. And you see that segmentation even within Bitcoin. So you've got the Bitcoin purists that no matter what you do, they're going to hate that corporations are involved, period. Right? Because
Yeah.
they viewed
Yeah.
Bitcoin as needing to remain pure and it just needed to be people that are involved. Whereas my perspective on Bitcoin was when you get a gift like Bitcoin that's released to the world, right? Satoshi walks away and leaves the project open to the world. You no longer get to control how the world best utilizes that product, right? It's going to find its highest and best use throughout time. And storing value is a massive use. And I don't think you, even at the time when Bitcoin was released, obviously there was foresight there where they saw what was happening with the fiat currencies, but I don't think that even Satoshi would have probably seen how quickly it started happening. It accelerated at a massive pace when the COVID era hit. And so now it's not just individuals that are needing to protect themselves. You also have to realize that corporations are made up of exactly that, individuals, right? So the adoption's always starting at the individual level. That's where that conviction first has to be built, and then it works its way onto the corporate balance sheets where they're trying to protect those investments and the value they're creating as a corporation as well. And that is just a massive benefit to the world. And you're starting to see that pick up. But even within the treasury space, people like a team. I liken it to, watching the NFL. Everyone's got their team. They get really passionate about their team. They're going to tell you why their team's great and your team sucks, right? I mean, you see plenty of that out there. And that's just human nature and it's fine. And it makes, quite frankly, it makes it fun a lot of times. But I think the part that you have a quick learning curve on is what you saw recently with pretty much across the board with all the treasury companies was you were seeing massive capital rotation into stocks with incredibly low float, right? Most of these stocks, even when they were raising capital, the full shares weren't out there trading in the market. There's very small amounts of shares, which means very little capital can come in and have an outsized impact on these equities. And so there was this period of intense exuberance right away, and it all hit at once, and you could see it hit across the board. You could pick a name and go pull up the chart, and they all look the same. And I think what people are going to realize is that we're now reaching a point where this entire sector is kind of renormalizing and resetting values, right? You get that extreme exuberance, it deflates out of there. You had Bitcoin drawn down. People were also, losing their conviction in Bitcoin, and they thought that we might have already topped out for the cycle. And so people were rotating capital away from any of the investments in that space. But now I think you're going to see this at a point where, the exuberance has been pulled out of the market. And now is the time for these companies to continue pushing that message towards the future and continuing to build. What the critics want is they want you to roll over and give up, right? That's what they want. They want you to come down and say that their thought process is right. But you don't step into these roles to roll over and give up just because people start telling you mean things on the internet. It's not how this works. It's quite the opposite. You put your head down, you focus, you build with a time period of 5, 10, 20 years. And when you're doing that, the noise doesn't matter anymore, right? There's going to be periods of fluctuation. You're going to go through market cycles. You're going to have black swan events out there that impact markets broadly that you can't control. But when you're on one of these teams, that's not the time where you throw out your entire strategy and your entire thesis. Half the time, those are opportunities where you can actually accelerate things, and everyone was writing, MicroStrategy's obituaries in the early days and talking about how he bet everything and he lost. I don't think he was having a great time, but what you never saw him do was quit, right? He never quit. He had conviction. He knew where this was going. He was focused on a long-term transformational plan. That was a really big idea, and he pressed on and he pushed forward, and now he's winning. And that's what it takes to succeed in this area. So for the people that, come out of the woodworks and, they want to chirp you and tell you it's over and you've lost, like, buckle up, because this is a long ride, and these are not
Yeah.
teams that quit quickly.
And they had the money. It's
Yep.
like, well, when you have the money, there's incentive alignment here with all of these companies. I think that's one of the more unique things. It's a little bit different than traditional financial equities, right? Like, we all want Bitcoin to do well. That's a little bit different than the fiat treasury companies that are, squandering value.
Well, this value gets retained. And I think
Yeah.
that's one really important distinction that people overlook between traditional companies is, all right, you've got earnings from a traditional company, but those earnings have to quickly be recycled back out the door, right? It's constant reinvestment. You're constantly having to roll it forward, and you've got to speed up, or you've got to boost your sales cycle. You've got to produce new products. You got to put it into R&D. You have to put it into all these things and hope that those investments pay off continuously into the future. Whereas here, where we're effectively riding the debasement trade, which is one of the most certain outcomes that you can possibly think of at the moment, every asset that we purchase with the capital raised through this strategy goes onto the balance sheet and has the ability to continuously perform into the future. If you don't think that money printing is going to stop and that debasement is going to stop, then it's a pretty good risk return or risk adjusted return opportunity, excuse me, to hold Bitcoin and ride that cycle into perpetuity because they can't stop. That's how the entire economy is designed. And if you're going to continuously be trying to spur growth and grow your way out of debt problems, it means you're going to have to continuously provide easy access to money. You're going to have to inject more money out there into the economy to keep things moving. And that's going to put these companies that are building these war chests, these incredibly strong balance sheets on a fixed supply asset like Bitcoin in a position to be able to capitalize on this for decades and decades to come. So it's foresight. This is what happens when you come up with a really bold idea and you see it being implemented and you double and triple down on this idea and the revolutionary aspects of this asset and you make it the core of your corporate strategy moving forward. And I think people are going to be very surprised looking back, 10 years from now, looking back at the time that we're in today and going, I didn't realize how big this was going to be because I think it's going to be absolutely massive.
As you have certain people writing obituaries for Bitcoin treasury companies, literally, I think for the first time ever, Wall Street banks published research about the debasement trade. That's how early we are. Like this last week, they just published that. That is the new idea on Wall Street. And and you think about how much capital is at play there, and why we're talking about building all these things out, building out amplified Bitcoin through common equity, building out digital credit through fixed income preferred equity securities, Bitcoin itself as just an amazing fundamental base asset, that debasement as a long-term thesis is just starting to be discussed on Wall Street into pensions. I mean, you think we're at the end of this. I mean, that tells you how early this is. This trade has, I mean, forever to go, but the digital gold rush era, I still think has 10 to 15 years to go. And you think about, and I think one of the things that I've never got a good answer from the Bitcoin OGs that think Bitcoin treasury companies just aren't going to work because, you know, they looked at, you know, a low float and a pop and it goes back down, is tell me how it doesn't work if your cost of capital that you're borrowing at is less than the future return of Bitcoin. If you are a Bitcoin bull, the structural position that Bitcoin treasury companies are putting themselves in, and I think preferred equity is the best way to do it because of the longest duration of that asset. Tell me how that doesn't work if you think Bitcoin goes up 30% a year. It just works, and I think that is it's just math.
It's just math.
The only way it doesn't work is if you think that Bitcoin's not going to go up that much, and if that's your point of view, then, you know, maybe you're a Bitcoin OG, but you must think that Bitcoin is over. And I think that's not their view, but yet they don't seem to understand a digital carry trade that has been put in place for different purposes for institutions for decades.